Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Canada. Today's date is June 21st, 2024. I'm taking a look at the 4-hour chart for this currency pair. And if we look at the price action this week, the closing level from last week came in right about here. We tried to move higher in trading, testing this swing level through here, which had just a few different swing levels. Admittedly, the price moved above and below it in this period. Then tried to test that level in end of trading last week, but moved above it also before rotating to the downside into the close and trading this week. The high price came up toward that level near the 1.37613 and rotated back to the downside. The price action has seen its share of ups and downs. In the midweek, we did come down to test the 100 bar moving average on the 4-hour chart and then rotate to the downside below that level on Thursday's trade. In trading here today, we were able to get below a couple levels, including the 200 bar moving average on the 4-hour chart and the 38.2% retracement of the range since this high going back to mid-April to the low price that we saw in the month of May. That 38.2 came in at 1.3687 along with the 200 bar moving average, and breaking below that level should have sent the price down toward, let's say, this low target right here, which was the low price from a few weeks ago. But the momentum faded. We rotated back to the upside and have since moved up to, in the most current bar, to test the 50% midpoint of the same trading range from April to May at the 1.37173. So if the price is moving back toward the middle of what has been a range since the middle of April, then that seems to me a nice little neutral area where the price doesn't really know which way it wants to go, or traders don't know which way it wants to go. If I were to give a little bit of a bias, it would be a little bit more to the upside, being ahead above the 200 bar moving average, above the 100 bar moving average, but even that is looks like breached right at the moment, with the price currently trading just below the 100 bar moving average. So even making it even more sort of neutral for this pair. Then again, we're also below the 50% retracement, so maybe the bias is a little bit more to the downside. It's that close. But what we do know is that if the price were to move back below the 200 bar moving average, that would definitely increase the bearish bias for this pair. Conversely, if we moved above the 50% retracement and started to look toward this 137.34 to 42 swing area here, which was the ceiling through here, and get above that level, that would give the buyers a little bit more confidence that perhaps we have potential to move higher in this pair. But ultimately, but if we take a broader view of this currency pair, there is a lot of ups and downs, and with most of the trading taking place in this red box right here, with 136.04 as the low, 137.84 as the high, and trading in between those two levels at the moment. So that's my technical look at the dollar versus Canada. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.